Do you know what helps? You know what helps with no sound is taking the mute functionality off. That often helps. Dude, you should be able to hear me now. Can everyone hear me? Let me know in the chat if you guys can hear me. Just put a thumbs up in chat if you guys can hear me. I hope everyone's doing well. I've been talking a lot of crap for the last, I don't know, 3 minutes. How's it going, Seb? Sanjeev, how's it going, bro? So we've got 33 in the chat right now. Welcome, everyone. Today, we're just going to go over some setups that I took in the last couple of weeks in the community. We're going to go over why they worked, why they didn't work, why I took the trade, why I didn't take the trade. So we'll go over that today. I'll explain my whole reasoning behind taking trades as well, so you guys can understand exactly how I trade. Give me 1 second here, guys. Christian, I'm doing really well, thanks, bro. What I'm going to do is I'm going to load up NQ because I had the CFD of NASDAQ open. We've got 45 people on the stream right now. Welcome, everyone. So today I'm going to go over Okay, cool. Yeah, it seems to be freezing every now and then. We're just going to have to deal with that. Okay, so let's go back to, like, let's say the beginning of October. Let's go to New York session, the 7th of October. That'll be around here. You can see the blue, these blue lines indicate to me that the market was closed, and market opens in this black opening here, right? So we can see here, first of all, let me get rid of my previous markings. So basically, all I'm looking for in my particular strategy are 2 different zones on either side of price action. So price action is over here, and I am looking upward and I'm looking downward from that to find zones where it makes most sense for me to take a trade. Now, all I'm looking for in this case is support and resistance, and I look for key zones where price has reversed from. So we can see if we're going from right to left, what do I see? I see a zone here where price has reacted considerably. However, it's just on its own. It's one zone on its own. And that doesn't give me a lot of confidence. So if I mark up this zone and I go to the left, do I have anything to the left that kind of supports that? Well, if I extend the zone to include this kind of supports this zone, right? So for me, I would be looking for buys if price breaks and closes above and retests this zone. Similarly, for sells, I would be looking at the exact same thing, but towards the bottom. So if I go from right to left and I'm looking at these lower zones, there's a zone here. But if I look left, there's not much to support it. You can count this as a zone. So if we then extend it even more to the left, we can see we now have this full zone, okay? So it is quite a strong zone, right? So we extend it even more to the left, and that's essentially what we get, right? However, there's a couple other things that we can look at, okay, depending on where price is at, all right? So it's important to understand, it's very important to understand how you've marked out the charts. Give me 1 second. So with this particular example here, you can see price moves to the downside. And here we push down aggressively, okay? And we break out of this zone. Now, once again, why did I not look to take a trade over here? Can anybody tell me? So can you guys tell me why I wouldn't take trades in this zone? Let me know in the chat. Martin says it's in the middle of the zones. That's kind of right, but also not. Seb got it right. There's no space. So from here to here, there's not enough space for me to get into a trade. So if price breaks and closes below, retests here and goes lower, there's not enough space for me to get my full take profit, or at least get a one-to-one risk reward. In this case, though, we've cleared this and we've got enough space all the way down to here. So in this case, and by the way, these are real trades that I've taken in real time in the live environment in front of, over 80 people on a live stream. We do it every single day in our community, and I trade live every single day for transparency. We call these all live. So this trade here broke and closed below. You would then get in here with a roughly 30-point stop loss, and you're targeting 1 to 2 risk reward ratio. Okay, so you can see it retests here, and it then goes all the way to our target. Okay, and what you can do is go break even. Sorry, guys, it seems to have frozen again. Give me 1 sec. Let me just quickly fix this for you guys. Okay, should be back now. Hopefully it should be fixed now. Give me 1 second. Cool, should be fixed now. So as you guys can see, the reason I didn't take trades here, there was not enough space for me to get this full movement, okay? The other reason is that if we had price bounce off of this zone and come back, we would then potentially change direction, okay? So that's essentially why I wait for price to break out of the full range before getting into a trade. Now, there's a difference between getting involved in trades that break out of a range, but there's also a difference between getting into a trade that's actually broken out of the full range and is on the extremity. We only want to trade on the extremities, which are on the outside of these two zones. If you look at this range, there are zones inside of this range, okay? We do not want to be trading inside of this range. We want to be trading the extremity and the outer range. It's pretty clear that you can see that there is a range right here, okay? We can see the range clearly. We want to trade when it actually breaks out of the range. When you try to trade these areas, you will often get faked out, right? We trade breakouts, not break-ins. That's correct. So a lot of people get stuck trying to trade this kind of choppy price action on the 5-minute time frame, okay? And you cannot do that because what's happening here is that the market hasn't chosen a direction just yet. You want to wait for the true breakout, which happens here. Why? How do we know that? Because we've zoomed out and we can see there is a clear range. And when we mark out the extremities of that range, we know where it's safe to get in, which would be on the extremity out here or up here, right? Does that make sense to everyone? Let me know in the chat. Put a thumbs up in chat if you guys understand and that makes sense. Okay, but why not sell in the second level? So you see this level over here. There was a level here, there was a level here, and there was a level here. Why did I not sell here? Why did I not sell here? Why did I not sell here? Okay, there's a good reason why I didn't sell in either of these zones. So look here. We've got 16 points here, max. We've got 14 points here. And we've got here around 30 points, okay, which is the bare minimum, okay, for me to consider a trade. So here, what you'll find is if I get into a trade with a 30-point stop loss, I can't even get to half of my stop loss in profit, okay, before the price could turn around on me. If I get into a trade down here, same story. I can't get into a 1-to-1 risk-reward ratio before we hit another zone where price can easily turn around again on me and go for my stop loss. Then in this zone, we've got just enough to get to a 1-to-1, just enough. But price did not come back and retest the zone. Price just continued to melt. And so when price continued to melt, I looked at the extremity of price, which is the safer zone to trade. So we got into a trade here with a 30-point stop loss, and we were able to take that all the way down. Can you share the view about MGC? I'm not sure what MGC is. Can you share your gold on view? View on gold? I don't actually trade gold. I trade NASDAQ, I trade NQ. Those are really the main things that I trade. So I hope that makes sense, guys. Let's have a look at another example real quick. Let's get rid of all my drawings. Yeah. I'm going to use the CFD chart for this, but it's the same as NQ or any other. So let's go to the next day, which is 8th of October. Let's just find it first. So this is the very next day. This is the market open for me. Okay. So we have market open happen, and then we have this extremely strong push. Okay. Now, here are the zones. Okay. So again, the core of my strategy is around 2 zones. And when you can spot these 2 zones, then you're able to trade this with a high level of accuracy. So, like I say, we're looking for one area that is below where price currently is, which before the breakout happens would be here. Okay. So we're looking for a zone on top and a zone below. It must be on the extremity of price, the extremity of the range. Okay. And there must be enough space for me to get in and out of a trade. So if we go from right to left, let's see what zones we have available to us. So we look right to left, we've got a zone here, okay, because we've had a reaction. That's all we need. We need a considerable reaction that creates a V shape like this. We've got a zone here, and we've got a zone here. Okay, this is the highest zone. So if we look further left, do I have anything that supports this zone? I do, okay. I also have this zone down here, which is quite close by. So what I would do is start to draw this zone out. Okay, what I would do is draw it from the candle wick to the candle body like this. And then I would extend it out to include this. Now, if I look further left, is there anything else that's close by? Well, yes. Let's look at this. We've had price push down aggressively, push up aggressively, and then push down again. This, what is this? It's a V shape, right? It's a clear V shape over here, right? So what I'm going to do is include this, okay? I'm going to include this in the zone. So if we look right, we're waiting for price to break out of this zone, okay? So price breaks out of this zone, breaks and closes with a candle body. We would then get involved in this particular trade. Okay, 30-point stop loss on this. Why? Because we want to cover this whole candle's imbalance. We also want to make sure that directly below there isn't any huge imbalances that could cause price to come lower. What we do have is a small one over here, but it's pretty minor. And most of price here is pretty efficient. So I'm not too worried that price is going to take me out before going up. Okay. So we closed, just broke and closed just above the zone. We're targeting, first of all, 1-to-1 risk reward, which is where we will either take our first profit and then go break even. And then our ultimate take profit is at 1-to-2 risk reward ratio. So we get triggered into this particular trade over here and it pushes. We would then look to take our first target here or go break even at this level. We don't quite get there. Okay, we come back to retest, we push, and now we're heading for the 1-to-2 risk reward ratio. We've either taken some off the table here or taken it all off the table, or we've gone break even. Okay, that depends on you and your actual risk appetite. And there you go. We get our full 1-to-2 risk reward. Anime says, backtesting is easy, sir. Please do in live market and explain, please. It will help us to improve. So, Anime, when it comes to trading, you can't just make a setup happen out of thin air. Right now, we're outside of my trading hours, so I'm going over previous market examples. I do trade live every single day with my private community, and it's all recorded, which I post in public. So all the records are posted in public. So it's all video recorded. So every single day we call these out. This particular trade that I just showed you here, I took live in live market conditions. This currently is replay mode, obviously, right? I'm just showing you examples of trades that I have taken live. If you want to see the actual records of these trades taken, they are actually literally recorded. There's also probably a few people in here that are part of my community who will tell you these trades are called out every single day live. Today, we took a loss, and I'll show you guys the trade that we took, but it didn't end up working out today, and it's not wins every single time. We have anywhere between a 65 and 75% win rate with our 1 to 2 risk reward. Can we do breakout plus FVG or imbalance? So the only ways that I use FVGs and imbalances is to invalidate my trades. So for example, if we look at this here, I would look below my stop loss and look for FVGs. So we've got one here. It's a very small one, so I'm not really worried about it. However, if there were multiple big ones below my stop loss, I would then lower my risk before getting in. Right? I hope that makes sense. So if I see those imbalances or FVGs, then I am a bit more cautious, but I'm always going to be trading just simple structure and breakouts. What do you think about IFVG? IFVG is simply just another form of support and resistance. FVGs are also just another way to mark out zones. It's different methodology, different naming conventions for similar things. Everything is just a break and retest at the end of the day. So I prefer to just stick to what I'm doing here. It just makes it simpler for me. And I'm coming from I used to trade smart money concepts. I used to trade ICT. The reason I switched to this is it's much simpler. There's less variables for me to take into consideration before getting into a trade. The problem with most people is that they complicate their trading so much that they get analysis paralysis. And you get analysis paralysis when there are too many variables in your trading strategy. So when you simplify your strategy, it allows you to execute with confidence because there aren't a whole bunch of criteria you're looking for before every trade setup. With my trade setup, I'm just looking at 2 zones. When those zones form, I can take a trade. It's as simple as that. There are other factors that I take into consideration as to how strong those zones are, but I'm always only looking for 2 zones. And because I've simplified it, it helps my psychology because I'm not constantly reevaluating different criteria for that particular trade. It's just 2 zones, and they're very simple to spot. I've already shown you guys 2 examples of how to spot those zones. If we look at today, let's have a look at the trade that we were looking at today. So market open would have happened here. Okay. Let's rewind it. So market open would have happened roughly here. What we can see is that we had this aggressive push here, and we've had multiple reactions. So it's not just a pivot for me, okay, because we've reacted here and then reacted once again. So at this point for me over here, I would have considered this just to be a pivot point where price is pushed in and pushed aggressively out of. But if we look left, there's nothing supporting this zone. It's in the middle of nowhere, okay? But later on, we have price push back into the zone and push back out once again over here, okay? Pushed in and pushed out once again. So what I'm now going to wait for is for price to break and close above this zone. Similarly, I would be looking at lower zones as well. However, there's nothing really clear for me. We've got this over here, okay? And then we've got this here as well, okay? But what you'll notice is that there's one here, 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 here. It's very choppy. There's no clear breakout zone. So the closest you're going to get is this zone here, which then only gives you 14 points to the next zone. And then from that zone to the next zone, we've then got around 30. So the lower zone would ideally be this zone right here, but it's quite tight. So taking a breakout on that zone is going to be quite tight. Ideally, I would like to see price push below here before I go short. We've then got 22, but this isn't really that strong of a zone. So yeah, even that's not that strong. So I would be looking at this here to go short. Okay. But in this case, obviously this happened today. So what price ended up doing was we pushed up higher and we broke and closed above this zone. We first rejected it and swept it quite aggressively. Broke and closed above the zone. Just one second, guys. Someone's blowing me up. We then broke and closed above on this candle here. Okay. You would then enter here with a 30-point stop loss over here. And then you would look to go for 1 to 2 risk reward. As you can see, we did tag in and go a little bit, but we didn't quite make it to our 1-to-1 target. Okay, before then crashing down to take out our stop loss over here. So today's trade did not work out. It doesn't work out every single day, right? But like I said, we aim for about 65 to 75% win rate with this strategy. With a 1 to 2 risk reward ratio, it's really good. Really, really good. Manthi says, I still always think about what I could have done better. Well, Manthi, at the end of the day, you can always do better. But if you beat yourself up about it too much, you're going to discourage yourself from getting back up and trying again when you fail. At the end of the day, we're all trying to get better at trading. But you have to remember that as long as you're sticking to your plan, then you're doing it right. And what I mean by sticking to your plan doesn't mean that you're never allowed to make a mistake. So in trading is a game of constantly failing and then correcting for those failures. So if you make a mistake and you don't follow your trading plan today, you make a mistake with over leveraging your trade, you make a mistake with moving your stop loss. What is really important is not that you don't make those mistakes at all. What's really important is that you don't allow that mistake to derail you and allow you to spiral into degeneracy and gambling. Because being a trader is very close to being a gambler. The only difference is having a plan. So if you stick to your plan and you go against those rules once, if you correct yourself and get back onto your plan, you are then, for a moment, you're a gambler, but you get right back to being a trader as soon as you go back to your plan. So the really important thing is not allowing yourself to get derailed off of your trading plan. Okay? Because at the end of the day, we're all just fighting a battle to not be gamblers and to be traders instead. Yeah, trading only works if you're disciplined, but at the end of the day, you don't want to beat yourself up about making mistakes either, because if you make mistakes and you correct for them, it's okay. As long as you get back on track, as long as you don't allow yourself to get fully derailed from your trading strategy and your trade plan, it's okay. Because making mistakes is a normal part of being a trader. And then getting back on track is where the real traders are made and gamblers are created. Okay, because if you make a mistake and you continue down that path of over leveraging, that's where you lose your account. That's where you fail. That's where you end up giving up. That's where you start to blame other people for your failures. That's where you start to say trading's just a scam. That's where you start to hear people blaming, there's just trade gurus, there's just people selling mentorships all over the internet. I'll never make it as a trader. Nobody's making money as a trader. And that's all a lie. Yes, there are scams, but that's not the reason that you're failing. The reason you're failing is you. It's not the fact that other people are scamming you. It's that, firstly, you were greedy and you went and bought some kind of training course that was unrealistic. Somebody was promising you unrealistic returns. Okay? That's your fault. You went into it with a gambling, greedy mindset instead of going with a strategy that you know is realistic, a strategy that is proven, right? The other thing is that it's very easy to find other people to blame for your failures at trading because there's a lot of people that are out there to get you, right? There's a lot of people that are out there to get you. But if you take responsibility for it and you make a mistake and you take responsibility and you go back on track, well, you're more than likely going to continue to persevere. And continuing to persevere is the only reason that I actually ended up making any money in trading. Personally, for me, the only thing that is different between me and somebody else who maybe didn't make any money in trading is the fact that I kept trying and I didn't give up. It took me 4 to 5 years to actually make money trading. And people are here after 6 months saying it's a scam because they didn't make money yet. Guys, people go to university for 6 years, 7 years to become a doctor. They have to do traumatic things in a surgery room to become a doctor. They have to see people dying to make a doctor's salary. And you're expecting to make more than a doctor's salary with trading after 6 months? Make that make sense. It doesn't make sense. If you dedicate yourself for 2, 3, 4 years, you can quite easily get to the point where you're making more than a doctor's salary. You can. But you have to dedicate yourself. If you think that you're going to get there in 6 months, you're stupid. You're not going to make it. You're going to give up after 6 months. You're going to give up probably after 2 months. Because that's not the right mindset to have. That's an unrealistic gambling mindset, obviously. That's a get-rich-quick mindset, right? The sky is the limit, for sure. But you also have to be realistic and understand it's going to take a good few years to make this work. Because trust me, losing at trading doesn't get easier. For in an example, like this example here, when we took a loss today, it's not easier for me to take that loss. Okay. And the more you get into trading, the bigger your trade accounts get, the more you've invested into your trading. So for me, with these kinds of trades, I lose thousands of dollars in a trade like this. But I've seen myself make thousands of dollars over a period of years. And so for me, that makes it hurt less, right? The other thing is seeing my strategy play out over months and years gives me proof that it works. And proof gives you confidence in what you're doing. And when you have confidence in what you're doing and in your trading strategy more specifically, you then overcome literally all of your trading psychology problems. It's the fix to all of your trading psychology problems. So everybody says being successful at trading is about trading psychology. So how do you fix trading psychology? You get confident at your strategy. You have a concrete strategy. Having data. So if you've got enough data on your strategy, number one, and you've got enough experience in your strategy, those two things. So data, number one, from whether it be backtesting data or real live forward testing data. You have both of those things, and then you have experience, whether it be 6 months to a year worth of experience of trading that strategy, actually executing it. Because guys, like seeing a trading strategy play out in historical data is all well and good. It can give you experience, but it doesn't exercise the muscle that you need, the psychological muscle that you need to then execute it in real life. Because if you're executing it in real life, there's emotions you have to deal with. So you have to then practice executing so that you can practice staying level-headed. And there's a few ways you can stay level-headed at trading, right? The main ways that I stay level-headed at trading is by making it easier on myself. And how I make it easier on myself is that I limit myself to one trade a day. That's it. If you take one trade a day, it gives you enough time to come back tomorrow level-headed. If you take a trade now and in an hour from now you take another trade, your first trade being a loss, your second trade is going to be affected by that first trade because you're going to come back trying to remake what you lost, right? And so you might end up taking a trade that is not part of your plan. So walking away is a lot easier than not walking away and then trying to follow your plan when you are emotional and you've just lost a trade. Similarly, if you've just won a trade, you're going to potentially be greedy. You're going to be overconfident. And then you're going to be like, screw it. I'm just going to risk what I just made on this next trade. I'm going to double or nothing. And then you start to stray into that territory of being a gambler. So the way to overcome revenge trading, the way to overcome being greedy, the way to overcome having a gambling mindset is by having a methodical way of trading. And for me, that's taking one trade a day and then coming back tomorrow so that I can execute like a robot that has no emotions. There will always be emotions, but if you're taking multiple trades, there's so much room for mistakes. There's so much room for emotions. There's so much room for over leveraging. There's room for revenge trading, and there's room for greed, right? That's why people often say trading higher time frames makes it easier. And I'll tell you the reason that it makes it easier is because you've got more time to make decisions. When you're trading lower time frames and you're scalping, you've got very little time to make decisions, and you can quite easily make bad decisions. You can quite easily see trades that I've set up that aren't part of your plan. And you try to reason with yourself very quickly that they are part of your plan. And you know that they're not. You try to convince yourself that this is a good idea because you just quickly make back what you lost, right? So trading higher time frames gives you more time to make decisions, which is why I never go lower than the 5-minute time frame. Alrighty, guys. So we got about 5-6 minutes left. What I want you guys to do, there's going to be a giveaway today, but we're going to do it after the stream. Okay, what you guys need to do to enter the giveaway, you guys have to comment below the stream, not in the chat right now, not in the chat, but in the comments of the stream. Comment what you learned in today's stream. You cannot spam, you cannot comment multiple times. Okay, so it can either be a question or it can be what you learned from today's stream. So just comment that in the comments below, not in the chat here. Only one comment, one entry per person. And then I will choose 2 of those people to win a 50K Guardian account. So we're giving away 100K today. And all you have to do is comment below to enter. Martin asks, how deep must the rejection be that gets you into the trade? There doesn't need to be a deep rejection. So Martin, basically, when you're looking to get into a trade, the only time I actually take into consideration rejections is when we've overextended. So if price pushes out, let's have a look at an example. So we've got our zone here. We're looking to get into a trade over here. 30-point stop loss, 60-point take profit. If price breaks out of this zone and it pushes all the way to take profit, before coming back, okay, to retest. If I see it's done this and it's coming back aggressively to our zone, I'm then going to wait for price to push into the zone a little bit longer and then push back up, okay, and reject. That's the only time that I'm looking for real rejections. However, if price gives me a good sign of continuation, which is a more shallow breakout, and then a quick retest here, and then a continuation of momentum, then I don't actually wait for any rejections or any kind of hesitation. I'm simply waiting for price to break out, break and close, retest, and I get in straight away and I go long, right? The only time I'm looking for price to actually show signs of rejection is when I'm unsure of that trade. And that's when price has broken out, gone really far. So either close to our target before coming back to retest, or past the target even. If it comes back aggressively, I'm going to wait for price to push into the zone more, start to reject. Maybe it closes back out here, and then I'll get in long. That's the only time I actually look for rejections in trading. And that doesn't happen often. Yeah, so after the video is done, it should get posted and you should be able to comment, right? So comment below if you guys have any questions or if you have anything that you've learned today. We will pick the winners probably by tomorrow. You'll get a response from the GuardianTV channel, right? Telling you that you've won. Once that happens, it will have instructions in that comment telling you how to claim the account that you've won. So all you need to do, once again, guys, is comment below this video, which is going to end soon. It's going to end. And then once it ends, you're then able to comment below. That will get you an entry into the draw, right? We will then pick 2 people to win. You will get a response to your comment from the GuardianTV channel, right? Martin says, so you can also use limit orders to enter with your strategy? Yes. So in most cases, you can use a limit order to enter with this breakout strategy. We didn't like to do it in the past because we like to manually get in, but the problem that you end up having with getting in manually, sometimes you'll get in late. You'll get in either early or you'll get in late, right? So, and that can also cause like emotional issues. So if you set a limit on this, it's fine. The only thing you need to watch out for is if it's pushed aggressively in, like I said, if it's pushed aggressively out, and then it starts to come back to retest with a lot of momentum, you're going to want to get rid of this limit order and then execute manually when it starts to reject. So that's how I trade it. Alrighty, guys, I'm going to end the stream there. Thank you very much to everyone for watching. Once again, to enter the 100K Blue Guardian account giveaway, you need to comment below the stream as soon as I finish the stream. You can only comment once, and you need to comment with what you learned during the stream or comment a question about the stream. We will then choose someone by tomorrow. Right, everyone, thank you very much for watching. Appreciate it. Remember, comment below this video once the stream is done. I hope everyone has a great day going forward. I'll see you guys same time, same place next week. If you want to, you guys can follow me on my channel, Garland Trader, and then you can join my Discord as well. If you want to join our weekly streams, we do a free stream every week. You guys can watch us trade this live. And then obviously we have a private community where we stream every single day as well. All right, everyone. We'll see you guys same time, same place next week. Cheers, guys.